I don't look at the properties where his gap is 3% because I believe in creating appreciating value, right? So I look for distressed asset where there is a mortgage issue or where there is a, you can say, extensive renovation is required. Those kind of assets you can turn into, like, roughly we can say we can double the money. Double the money or 1.5 depending upon the asset. But those are the assets where you can create value with a positive cash flow.
Welcome friends, my name is Mandeep. Dhesi. Today we are going to discuss in our podcast how you can scale and be an expert as a real estate investor, the point to build your wealth. And we are coming up with our team expert Vikram Singla, who's expert in multifamily. He have ton of experience investing starting from residential to multifamily with 2 decades of experience only in real estate. There are a lot of things we discuss about how you being as a beginner scale your portfolio, build it, what are the key challenges and why multifamily altogether. You will definitely enjoy this discussion, ton of information. I hope you're going to enjoy it as I enjoyed discussing more about multifamily and the perspective of it. Do share this conversation with your friends and family. Let's start with this amazing conversation.
I'm a beginner. Let's say, as an example, I did what lot of single family duplex rental properties. But why I should start investing in multifamily?
Because one thing, like, you can do the leverage in multifamily.
Okay.
And second thing, as a individual investors, how many properties you can buy?
So there's a cap.
Yeah. So there is a cap. You can buy 2, 3, 4. Because when you buy individual properties, bank look at your personal income. But when you buy any multifamily,
Yes.
banks look at that assets income. So this is a big game. And second thing, when you add $1 to the income, net operating income in multifamily, so the multiplier is, if for example the cap rate is 5%, if you add $1 in net operating income, ultimately you are creating $20 value in the asset. Because multifamily, the way of valuation is different from single family houses. Because single family, the value creation is direct market approach. Direct market comparison. But in multifamily, it is valuation based on cap rate. So that is the biggest thing. That's why people go for multifamily.
So to summarize this point, we can say it's about where to scale yourself to build wealth as a multifamily expert. I just want you to add here, I know Mr. Vikram, he has been doing multifamily so long. It's for a beginner topic. Just to add, what is NOI is a net operating income. So it's basically all your expenses, your property tax, your maintenance, your insurance, all those factors that come into maintenance. You subtract it out to the net expenses, like net income throughout the year. So it's generally around 50%. You take out those expenses.
That is the, we can say, rule of thumb.
Yes.
Like gross income minus vacancy rate, minus bad debts, minus whatever the operating expenses, you come up with the net operating income.
Yes.
So thumb rule is 50%. You can say these are the expenses. But here is the role play, like whether you are a veteran investor, experienced investor, so how you can increase the value of the building, whether you increase the rent or whether you
forced appreciation, like do some renovations like that.
Like that is a different capital appreciation. I'm talking about how you increase the income, whether you increase the rent or whether you decrease the expenses. Operational expenses,
obviously,
right?
what comes into your pocket that matters.
So then net operating income goes increase. Right? So based on that, the value of the assets go up.
So that's what they were talking about, cap rate. Another thing to note about that. So it's basically return what you're getting on your investment. So if you are investing in a safest asset, your cap rate will be lower. You are in A-class buildings. We'll go into the details. Like you're in good locations, like you're in Toronto. Obviously, your cap rate will be around what, 3 to
starting from 3. But my strategy is totally different. I don't look at the properties where his cap is 3% because I believe in creating appreciating value, right? So I look for distressed asset where there is a mortgage issue or like where there is a, you can say, extensive renovation is required.
Okay.
Those kind of assets you can turn into, like, roughly we can say we can double the money. Double the money or 1.5 depending upon the asset.
Okay.
But those are the assets where you can create value with a positive cash flow. Because multifamily is the asset. Because people, if we talk about single unit to duplex, triplex,
Yes.
right? So you will not find a positive cash flow.
Okay.
Even if you find a positive cash flow, you will not find that kind of positive cash flow. Because positive cash flow is the king. People go for capital appreciation. So I'm a big fan of positive cash flow.
Okay. So you want what is coming into your pocket today.
No,
It's not about
definitely.
after
See,
5 years.
because-
Definitely appreciation is there.
Because the thing is, appreciation, I'm active investor.
Okay.
I'm not a passive investor, right? If I'm active investor, I need cash flow. Because cash flow is the king. If I have a cash flow, I can buy another assets. But appreciation only you can cash when you sell the asset.
So basically, we need to differentiate between active and passive investors.
Yeah,
here.
definitely.
So a lot of people who are watching the video, they might be passive, so their strategy might be different. But in this case, we are discussing like, I want what is coming into my pocket. The cash flow is really important,
yeah.
and that's a key thing when you are investing in a multifamily.
So Grant Cardone, like,
Yes.
you must know him. He owns 12,000 apartments in US. So he always talk about cash flow.
Yes.
Cash flow is the king.
Okay. So you have been investing into multifamily. So we talked about the beginner questions. You added the value into that. You bought it. What about the qualification criteria? Somebody where the debt ratios, like you go for single or duplex family, is already peaked out. My credit is okay. You told it's more about an asset thing. But what about a general person who have like 4 to 5 properties?
Yeah.
How many like units they can buy in a multifamily? Is there something which bank looks into? What are the criteria for that?
So there is a, like, if we say like a general rule of thumb, if you look at an asset, 30 to 35% you need as a down on the asset. And if you're looking for any distressed assets, definitely you have to go for private lending.
Okay, initially.
And yeah, so you need carrying cost for a year or might be 1.5 year or 2 years, depending upon like how big the property is and how much renovation it requires. So based on that, so you need construction loan for that.
Okay.
So like counting all those expenses and based on the cash flow, so you can jump into it. It doesn't mean like you have to buy the whole asset on your own.
That's a good point to add.
So
Actually,
you can buy 2 people, 3 people, 4 people, 5 people. Even like there are models available in the market, LPGP model, limited partner, general partner model.
Yes.
But even like if you and me want to do, we both can do it. If our one of like other friends they want to do, they can join us. So we can incorporate a company. We can be a shareholder, and we can do it. And one person can be a manager, and we can pay him the fee.
Yeah. So there can be a limited partner, like a active.
No.
partner.
So I'm talking about here. This is not LPGP model. I'm talking about.
Okay.
I'm talking about corporation structure.
Okay.
So we can create that structure like a general corporations, and we can be a shareholder.
So that's a very important point you discussed about the partnership. So these properties are for partners, basically, if you want to scale your portfolio.
Yeah, definitely.
This is
So,
a good-
so for example, you're going for a $5 million property, right? So might be I don't have a capacity to buy $5 million.
Yes, yeah.
So I need a partner. So you need like-minded people. So you even like we are in an EXP. Our culture is grow together.
Yeah, supportive.
Right?
Yes.
Yeah. So supportive. So if you have a big pool of funds, you can go for big assets.
Remember we were discussing that deal you did outside of GT. I'm not
Yeah.
disclosing it here.
Yeah.
You were talking about that. So
Even I don't mind it.
Yeah.
But so like I love, because I think out of the box. Very few people know about multifamily.
Yes.
Most of the people, they think buying selling is a real estate. Buying selling is not a real estate. And especially residential is not only the real estate. Residential is for living.
Yes.
Right? It's okay. Like I'm not saying like residential is bad. It's a good thing. But the leverage you can make in multifamily, that leverage you cannot make in single family. So for example, if we talk about per door cost, what should be the average per door cost at the moment in the market? GTA, if we talk about, so
It's a 1 million, right? So that's like
no 1 million.
Like for
I'll
single
take
family,
like bare minimum. We take like $1 million house.
Yeah, in GTA, right?
Even
Yeah.
in Brampton, we talk about $1 million. Even we don't get anything good in $1 million, but let us say we get something
Yes.
in $1 million. Even we make 2 units.
Mhm.
So per door cost is 500,000.
Yes, $500,000. Yes.
But same with $1 million, we are going for bigger assets, like $3 million, $4 million. The per door cost would be around 300,000. So you are generating the same rental income on 500,000, and you are generating same rental income on 300,000. So when you calculate the return on investment, so there would be a big difference.
Okay.
So that's the key.
It's a very valid point, right? So now let's say for a beginner person, how they can find those deals? Like you found those deals outside of GTA, wherever the good locations. Like how to get about this?
Mandeep, you are a realtor yourself. I'm a realtor myself. If people can do everything on their own, so then where our role come to play, right? So we are professionals in the market. We know what is the good property. So we analyze the property. Then we come to a conclusion whether we should jump into this property or not, right? So it comes with the experience. It comes with the learning. Right, so that's why the professionals are meant for.
So just to add here, like it's good to work with your aunt and uncle or friends who are working real estate just a hobby, because they are part time. They are not putting 50 to 60 hours into real estate. Don't take that risk. Just a golden nugget here, especially on multifamily. It's like $1 million game you're involved in, and you need a real experience. The person who have a power team, that's what I always talk about, because it's about your relationship, how to get your mortgages done, your contractors, how to handle with the tenants, property management, so many things,
architects, structural engineers.
So if you have somebody expert here, like a team sitting here, you should always focus. Never trust it's like $1 million game. Like it's not $100 you're giving someone and okay, just enjoy with it.
So it's a big game. You should have a good team.
Yes.
And you should know the process, how it works. So you can lay the process and you can see the unforeseen. So here's the role play.
Here's a vision, right?
Vision. So if you can see the unforeseen, then you can that works as a shock absorber.
Yes.
Sometimes what you see, that is not the reality.
Yeah. So that's a very valid point to add here. So okay, so we are good. We did the analysis. So what about, do you have a good connections where you can help people, like if somebody want to scale on the real estate part of multifamily, how to get their mortgages? That's what we were talking about.
Definitely, as I already discussed, the mortgage, the bank is going to look at the asset.
Okay.
What is usually, if we say, for example, if asset is earning $10, right? Bank is going to give you $8.
Yes.
Because the debt service ratio should be like ballpark figure 1.25. If you're making $8, so your income should be $10.
Yes.
In some cases it could be 1.3 as well, but this is the ballpark figure. So that's why bank will not lend you money if your asset is not good.
Okay. So it's all value on the asset. So you help that with the analysis before putting that offer, right? So because we are discussing here in the layman terms, what do you think are the challenges or the risk involved in multifamily?
I don't see any risk. The only risk, sometimes like you cannot complete the project in the stipulated period that you think like you can. So your overhead cost can run. But I always look for a project where like there is enough cushion, even we see the unforeseen, still we are in a profit, then I take yes on that.
So I feel, just to add here, it's all about your relationship with the lenders or with your partners, with active or passive partners. You can educate them in advance. Like it might take more than that, because nothing is risk free. If we call it as a calculated risk.
See, if it's a risk free, everybody should be a millionaire or billionaire, right? So every investment comes with a risk, but how we can mitigate the risk?
That's the key thing.
So that's the key, and here the expertise come.
I just want to add here, like and as of today, we can say real estate market we can see correction here. Stock market is corrected. So let's say I'm giving two options. There's the stocks, and there's a real estate. Yeah. I'm giving you, like, we have to buy $500,000 one door property. What we will choose, like, because I'm just adding a tip here, $500,000 stocks, you have to put $500,000 from your pocket, and buying a real estate asset, what we talked about, like 80% loan to value, or it might be 65 in a multifamily. So there's a lender, somebody on your back supporting you buy that asset. So what will be your suggestion? Putting your money into stocks, 500,000, or you take a leverage here and use that similar money in a multifamily?
So why real estate is called real estate?
Okay.
Because it's real.
Yeah.
You can touch it.
Tangible.
You can touch it.
Yes.
You can feel it.
Okay.
Right.
Mm-hmm.
And real estate never can be zero. It
Very
can be
valid.
depreciate in value for some time.
Yes.
But it can never be zero. But stocks, you cannot touch it. You cannot feel it. Second thing, we are not that knowledgeable, or we are not that expert in stocks. So we take a tip
Okay.
from the people even who do not anything. Right? So if you want to invest in stocks, so my advice is invest in mutual funds.
Okay.
But you cannot compare stocks, mutual funds.
So it's like
with
apples
the
or
real
an orange.
estate. Yeah.
Okay.
So there is no comparison. I do invest in mutual funds, but the return you can get in real estate, you cannot get anywhere. The leverage you can get, the cash flow, even in stocks, you get capital appreciation, but there is no cash flow. But in real estate, especially in multifamily, you get cash flow and you get capital appreciation. So that's the key. Like after every 5 years, if market is good and based on the appreciation, you refinance the asset, you buy another one. You refinance, you buy another one.
Yeah. So this is an equity component involved
Yes.
in real estate. So that's a very valid point.
And one more thing I want to add here. You know, like the real estate prices are skyrocketing,
Yes.
right? So because of that, we see like the affordability to own a house is decreasing day by day.
Yes, obviously.
So the young children, we can say
Families,
fellows,
yeah,
families,
professionals.
right, professionals, they cannot afford a house. So what does it mean? It means you are getting a quality tenants
Yes,
in future.
that's very important.
Right? And the person who is earning 100,000, we know that person cannot afford a 600, 700,000
Home, yes.
dollar property, whether
yes.
it's a condo or whatever it
Yes.
is. So what kind of property they would like to live? So you have to design your investments according to them.
So that's a very valid point,
Yeah.
right? So this means you have a pool of tenants always available
Yeah.
for you.
So-
And just, sorry to cut, just to add here, like we have so many immigrants coming here.
Yeah.
It's like when the government policy is like half a million, 400,000 every year.
1% of the population,
Yeah, so-
that is the key number, plus international students.
So there's always an opportunity. Okay, we started investing in real estate, like multifamily, obviously. What is the exit strategy as an investor when you come into multifamily?
I think you don't need to exit. Why are you gonna exit if
No,
if-
obviously,
if-
like maybe you added some value, you refinance something like that.
you can sell it. You can sell your portfolio at
Okay.
any time. So there is not a problem. But I feel you don't need to sell.
Okay.
So why people make assets? They make assets to transfer to their kids, coming generation.
So it's a generational wealth.
Yeah, it's a
you're talking.
generational wealth.
Yes.
Yeah. So, but if somebody needs, they can sell it. But I don't believe in selling real estate. Even my clients, I don't recommend to sell their real estate. I always ask why you want to sell. Why
Because
you
they want to
sell?
buy another one.
No, it's fine.
Yeah.
But I have a strategies keeping the same assets I buy the other one. So I never recommend sell. Only sell real estate when you are in a dire situation where you feel like you cannot afford it, or like financial crunch. That is the time you can sell. Otherwise, you never sell a real
And
estate.
especially for multifamilies, it's calculated on the cap rate.
Yes.
So this means something is always coming into your pocket.
Yeah, definitely.
So-
So how we can increase the income? Focus
Yes.
on that thing.
Yeah, that's part, yeah.
And top of that, I forgot to add, we talk about like we improve the asset.
Yes.
Even you can add the units to that asset.
Oh.
You are paying the price for example, 10 units. If you are able to add 4 more units to it, your per door cost will
Decrease.
dramatically decrease.
Obviously, no. Okay, that's
Yeah.
a very valid point. Obviously, there's a permanent process involved.
Yeah.
Maybe you have city regulations for the height and all
But
these things.
nowadays, like we know, like population pressure, especially in GTA, right? So cities are looking for more dense localities.
densification is happening.
Right? So this is the time to get into the game.
Okay, that's very valid discussion so far. So any thoughts? What is happening for Vikram Singla in the future? What is your pipeline, your vision towards multifamily or anything?
So I'm walking on the paths of Grant Garden. so my dream is to have 12,000 apartments as well.
Very good.
And it's going to come true. That's my belief.
No, it's all about dreams, and dreams comes true when you put those actions and you have that mindset, and plus a team, a supportive team who is always accountable and encouraging you to scale more. That's a very valid thought. So like coming to your portfolio, it's okay. Are you focused more on Ontario, like Canada, or like what is your...
So I look outside of GTA.
Okay.
Because outside of GTA there are more opportunities.
Okay.
As I told you, I'm not fan of 4%, 5%. 5% is okay. 4%, 3% cap rate.
Okay.
So I'm a fan of big cap rate. Whether I find an asset, I create a value and capital appreciation, refinance it, pull all my equity out, and then move to another asset. Or I look for an asset where I can get 7-8% of cap rate.
Okay, so that possibility is there, but you need to move out of GTS, find those locations, those suburbs where you can have those cash flows.
Yeah, so definitely look for the cities. So you have to analyze the city, why I'm going to that city, what is the future potential in that city, what is the, you can say, people moving to that city or moving out of that
employment,
city.
trade,
So
opportunities,
so many
hospitals,
things,
locations.
so many things. And how's the city, city townhouse, whether they are friendly with the investors or not. So all those things. So
that
I recently bought one building in Coburg.
Okay.
So I really enjoy it. Like
working with the
so working with the city and the people.
Okay.
People are so humble. When I go there, I feel like I like a celebrity.
Somebody coming there because you are adding the value into the city.
Yeah.
This means more tenants, more property tax goes in. It's good for the city also. They see that growth.
Even in Coburg, if you talk about, there is not even a single apartment at the moment. We can say 99.9% occupancy. And you imagine the rents are at par Toronto.
Oh.
So 2-bedroom apartment rent is $2,500.
What else you need?
No apartment is available. So if you calculate, so my building, so I'm working on that. So when it would be 200,000 per door cost.
Oh, you bought it like, okay.
Yeah, so 200,000 per door cost, and you are getting $2,500 rent. So I beat 1%
rule also.
1% rent.
Yeah.
Right? Per month. I beat that rule as well.
Yeah. So
So even
amazing.
on which property you can get 1% rent?
Not in today's market. If you go 10 years back, it
Yeah.
might be, or it's a student rental or whatsoever. It's not possible.
Right? So with student rentals, people do student rentals, but that is illegal. That is not legal. So if there is tomorrow any
Some
issue,
hazards or
and
something,
any kind
risk.
of insurance claim or any fire, so you would be in trouble. So I love to do the things in a legal way.
That's very nice. You want to sleep with the peace at night.
See, when we do business at a big scale, we cannot do in a jeopardized way, right? So we have to put the things in place.
Okay, makes sense. No, that's a very valid point, right? So anything else you want to add here before we summarize? It was a really educating video. I know we can continue the whole day. Mr. Vikram is full of knowledge. You can see from his experience. So let's hold off for now for this video. We can continue the next one. Anything last thoughts you want to add here?
I just want to say one thing. Believe in real estate. Real estate is the only asset class that can change your lives. And real estate is not going to go away. It was here ages ago. It will here ages after. So definitely product gonna change. But believe in real estate. Only real estate can change your lives. And real estate can get you the tag of richness.
Yeah. So that's the only way to build wealth. Thank you guys. Thanks for watching another educating video, and at the last we always say don't forget to press the subscribe button, and we'll be coming more with Mr. Vikram, our multifamily expert, in the next videos. Thank you.